So good evening, everyone, and welcome to a webinar by Softlogic Stockbrokers. So today we would be looking at Sunshine and Watawala and getting an understanding of how these two companies stack up in the environment to come ahead. Now, we would have gone back and forth with regard to the palm oil ban, with discussions going with regard to it being banned completely, with it potentially being lifted. But these things are still very much in contention. I think along with that, when you look at Sunshine as a whole, palm oil is not necessarily everything. When you look at their tea segment, when you look at their healthcare segment, they're also a company that has performed quite well over the recent past. Additionally, Sunshine does happen to be quite aggressive in terms of expanding its presence. We've seen them do a lot of very interesting things with some acquisitions as well that they did over this past period. They've also expanded their presence in pharma manufacturing, which is something that we believe is quite interesting. So as we get started, I have two distinguished guests who I would like to introduce. Of course, I think they do not need much of an introduction, so we can get straight on with it. Firstly, we have Mr. Vish Govindasamy, who is the Group Managing Director, and we also have Mr. Hiran Samarasinghe, who is the Head of Strategy and Investor Relations of the company. Mr. Vish, Hiran, thank you so much for joining us in this webinar.
Thank you, Renat, and thank you, Softlogic, hosting us. And happy to engage with everybody, give a better understanding of where we are going, and also give any clarifications on the recent results.
Thanks, Hiran.
Thanks, Renat.
So the order of the webinar would be this. We would initially be posing some questions to the company. And once that's done, we would be opening it up for a Q&A with the audience as well. So with that, Natashi, would you like to go ahead and begin the questions for the company?
Thank you, Renat. So once again, we warmly welcome you, Vish and Hiran, for today's webinar on Sunshine Holdings and Watawala Plantations. So today we'll be having quite a comprehensive discussion about all the aspects of the group's performance and into the future outlook as well. So without further much delay, let's start off with the session. So since the interim results are released for both the companies for the third quarter of financial year 2024, I think it would be better to look into a brief overview of the quarter results for Sun and WATA performance to start the proceedings. Vish, would you like to give the audience an update on it?
Yeah, I'll ask Hiran to give you an update.
Actually, I'll take it. Even the results were released the day before, and we also had our call yesterday. I will keep it very brief. So basically, our quarterly revenue, we reported the 14.2 billion quarterly revenue, which is up 4.4% year on year. And this growth is mainly coming from our healthcare sector. We have 5 verticals inside healthcare, which all have done really well. And that growth has trickled into the group revenue. In terms of consumer, you would have seen a slight dip. It's down 7% year on year. And that dip is mainly coming from the exports. As you are aware, there's a tense situation in the Middle East, and the European markets are also not doing that great. So the volume decline from those markets have impacted our results. And this is despite the local tea market, local tea business of ours doing significantly well during that quarter. In terms of agri, I know WATA is separately reported, and you might be having all the numbers with you. Agri, we saw a quarterly reduction of almost 9%. And this entire 9% reduction is coming from the palm oil price. One thing is that the global prices have come down if you look at year on year. And also the local prices, there is some decline because of the demand and supply situation in the country. And also the availability of coconut oil, which is also a competing factor for palm oil. In terms of other key elements in the income statement, I would like to stress on interest cost, right? Like if you have seen our interest costs quarterly for the quarter, year on year, is down about 70%, significant. And that is mainly coming from obviously the interest rate decline. The other key factor is the tax. The increase in tax rate, if you look at a year on year, the tax rates have significantly increased. Some of our businesses has just gone up by a small amount, but for example, agri processing, which used to be 14%, is now at the normal rate of 13%. So like that, those have also impacted the results in this quarter. So net, with all that factored in, we reported 1.8 billion PAT for the quarter, which is about 188% growth compared to the same quarter last year. But also, it should be noted that it's like a slight dip from the second quarter results that we reported.
Thank you for that update, Hiran. So now let's look into the segmental performance in more detail and outlook of Sunshine Holdings since it is diversified in several areas. So first of all, let's look into the healthcare segment because it is the core segment of Sunshine Holdings, contributing to half of Sunshine's top line. So the very first question under the healthcare segment is for you, Vish. Would you like to tell us how have the industry dynamics for pharmaceuticals have been over the recent past, and what sort of an overall industry growth did our country experience for pharma in the year 2023?
Yeah, I think the big picture when it comes to the pharma industry dynamics, what is changed from before is the local manufacturing has increased from the prior years. So various companies are now in locally manufactured product. The government is giving priority to purchase locally manufactured products. So that's the one big change that has taken place in the entire industry. Other than that, even through the economic debacle, imports of pharmaceuticals have continued, especially in the private sector. We haven't seen any shortage of product availability in the private sector. We have continued through the crisis. Imports have always stayed steady. So give you a change, that would be one big thing to talk about is the manufacturing locally and the government purchasing more local products.
So with that, what sort of a market share change did Sun experience in the past quarters amongst other private sector pharma players?
Prachi, I think I'll take that. The market itself, the private market itself has grown at around 22% if you take year-on-year math, right? So we have gone from slight increase of our September. If you look at September 2023, this first half for us, we were at 12.9, and currently, as of December, we stand at around 13.09 market share. And this is just the pharmaceuticals wholesale. This IQVIA data excludes data from both the pharmacy chains like Healthguard and Union Chemist, and also pharmacies located in retail chains like Cargill's, right? So it's only the general trade mom and pop pharmacies wholesale market is measured in this data.
All right, thank you for that information, Hiran. And the next question is for you. To know further about operations in the pharma manufacturing business, could you specify if the group is aiming at any sort of capacity additions in the near term? And what sort of cost and revenue implications are we looking for such expansions?
Okay, predominantly in the pharma manufacturing, we are in the space of respiratory molecules, right? So the two big lines is the MDI line, which is the more modern format, and also the dry powder inhaler, DPI line, which is the older format of the same molecule. The DPI line has been operating for the last 8 years and it has a steady flow. Our MDI line is the only line, only plant producing MDI inhalers in the country. What we try to do is cater to the entire demand of the government from that line. So we haven't done any significant capex investments into the line to change it drastically. But what we have done is some automation and line additions. Also coupled with some process improvements, we have been able to reduce some bottlenecks and increase the output from the same plant. So to summarize that answer, we haven't done major capex, but we will be doing small additions and bottleneck removals to slowly address the entire demand for the government.
Yeah, so in that sense, would you comment on the capacity utilization levels as well at the existing manufacturing plants?
Okay, so it's difficult to give a weighted average. What I'll do is I'll try to give some color in terms of the main lines that we operate, right?
All right.
So the MDI line, the three big lines is the MDI line, the capsule line, which produces the DPI, and the tablet line. So the MDI line last quarter was operating at 97%. And fourth quarter also, to fulfill the orders, we are aiming to operate at those levels. Capsule line has a capacity utilization last quarter about 76%. And tablet line is at around 50%. So those are like normal. What is like running really high is the MDI line.
All right. Thank you for that information. And I have another question for you related to the same. As you mentioned, given the fact that the government is focused on supporting domestic suppliers, could you share any insights into government contracts that Lena Manufacturing has secured so far? And as you mentioned, the current portfolio consists of MDIs and DPIs. Would there be any like long-term capacity expansions?
Okay, so I think we continue. I'll break it into two parts. The existing business, the DPI line will be continuing as is. We will continue to put out the orders that we have, and that will be very stable. On the MDI side, as I told you, we are the only single manufacturer in the country. We can't cater to the entire demand of the government yet, despite our capacity increases. So we will look at how ways and means of increasing capacity, we are reducing bottlenecks and process improvement to get to that number. So in the medium term, we plan to increase by around 20% capacity output so that we can meet the entire government order.
All right, thank you, Hiran. Vish, I would like to ask you about the price aspect of pharma industry. We observed a couple of MRP revisions taking place over the recent years. How often can we expect such revisions, and what factors would impact such price changes, like the dollar rate, etc.? Would you like to comment on it?
Yeah, so so far, what has taken place is based on the exchange rate fluctuation. That's the only time the pricing has been revised since the original price control had come. And as you know, in the last 2 years, we have had some crazy fluctuation in the exchange rate. So in order to compensate the deep depreciation, there was a price revision. And then again, when the appreciation happened on the rupee, government again corrected the pricing. So those are the two big revisions that has taken place. The industry obviously is canvassing to make sure there is a proper formula or methodology as per the NMRA Act with proper consultation, that we come to an agreement on how the price revision should be held. So that's an ongoing process.
Thank you, Vish. And are there any impending MRP revisions for specific pharmaceuticals that we could witness over the near term? I think the audience would like to get an insight of it.
I couldn't comment on that because that's the regulator's prerogative. As far as we know, there is no discussion immediately, but then the regulator is the regulator. If they feel, that there is a price revision necessary, but looking at the inflation numbers getting better, etc., I can't see anything happening immediately.
Right. Thank you, Vish. So Hiran, the next question is for you. With a gradual shift in consumer behavior to in-store shopping compared to online options, what is the outlook for HealthGuard chain? And any comments on potential future revenue growth in that segment?
Yes, thanks for that question. So I think our strategy for the HealthGuard retail chain revolves around operational leverage. We have a fixed cost base and this is quite fixed, and we need to make more volume from that fixed cost base, right? So we have currently 15 stores. So the strategy is to expand our footprint, but very selectively. We will select specific locations within our TG, which is Colombo and suburbs. Those locations we will execute, but at a very, I would say, conservative rate of about 2 or 3 stores a year. So last year, or the current year we are in the financial year, we have done 2 stores. One is in Bangladesh, and the second one at the Havelock City Mall. So the next year also we will be looking to implement the same strategy going forward and to slowly expand the footprint in a very careful manner.
Thank you for that update, Hiran. Vish, could you give us some insights on the importance of the pharma devices for Sun? And what are the key equipment that generate a higher proportion of revenue in this sector for the main customer segments?
Yeah, so we are, in different segments. I think we are big in our diagnostic equipment. That's our main diagnostic equipment. And then, of course, a lot of the surgical equipment are the other equipment that we deal in. As the governments and the private hospital expand, these are things that improve with technology in terms of efficiency, in terms of speed, etc. So it's a continuous improvement in all this equipment that we bring to the table.
Yeah, so when talking about these product categories, it would be better to talk about the VAT as well. Therefore, with the revised VAT impact coming in going forward, what sort of a growth can we expect from these devices for Sunshine? Also, what is the projected future market share for pharmaceutical devices of Sunshine?
Yeah, so 2 parts. I think VAT has suddenly come up from 1st January. Given the current consumer situation, there's no way that we can pass it on to the consumer immediately. And our consumer is the hospital and their consumer is the patient, right? So you can't do it. So, but we will look at a way of slowly, strategically passing it on, because end of the day, it has to get priced in, but not immediately. So in the short term, there will be no change in the pricing, but it will be a step increase. In terms of market share, there is no readily available data, Rashi, on the pharmaceutical, the medical devices market. But we are very strong in the diagnostic space. Take for example, if you go to a private hospital in Colombo, do a blood test or urine test, it will be definitely one of our machines that runs that test, right? So we are very dominant in that space. Also, we represent brands like, in the surgical, we represent brands like 3M Healthcare and Johnson & Johnson. So those are used in all OTs. There wouldn't be any operation happening without one of our products, either a switch or a closure or a Band-Aid, plaster. So those kind of products as consumers get used at OTs, operation theaters is OTs. It's difficult to give a number in terms of market share, but we have a significant presence in both the labs and on the inside OTs.
Yes, I think we got a good knowledge about that because that was a very detailed discussion related to the healthcare segment. So now let's talk about the consumer segment of Sunshine Holdings. So the first question under this segment goes to you, Vish. What is the outlook for Sunshine's local tea business and export business? In a sense, the auction prices were on a downward trend. What is your take on it for the near term?
So our local market, branded consumer products has steadily grown year on year. We are the single largest market shareholder in the branded tea segment. And we intend to continue that growth with our 3-brand strategy that we have. And that will continue to grow with our marketing strategy and our ability to, communicate with the consumer on the quality of our products and the 3 different distinct products for the 3 different markets that we pitch at. So that would be our strategy, and we will continue to grow. What was the second part of your question?
Yes, so I was asking, since the auction prices were on a downward trend, how would you forecast for the near term on the auction?
So auction prices are something, tea end of the day is a commodity. And if you look at the last 50 weeks of tea prices in the auction, it's something that, based on quality, quantity, availability, etc., whatever happens in, if you have the last quarter, we have had terrible weather. So during that time, the quantity comes down and then the auction prices will go up. Then what happens internationally, Sri Lanka is end of the day a net exporter of tea. So the tea price in the auction are determined by our ability to export. When I say our ability, the country's ability to export. So it's a commodity pricing. So I don't think that will have a huge impact in our local market growth, brand growth. So our brand growth strategy is based on our ability to making sure that people consume branded products, which has a distinct quality in it.
All right. So in terms of tea export segment, what would be the main markets going forward? Like any proportion of future revenue that is anticipated as well?
So traditionally, Sri Lanka has been, very dominant in the Middle East and the Russian markets. But of late, all of the exporters have been looking at the Chinese market. That is a new market that has opened up for all of us. And the North American market that is also now very keen on having specialty tea. So those are the new markets. I think when I say new, it's been up in the last 3 to 5 years. We have been all working on those markets when there's a downward trend from both Russia and the Middle East.
Thank you for that update, Vish. And turning to you, Hiran. So let's talk about the confectionery business. Would you like to give an update on Dainty's local market share and what sort of a profitability contribution can we expect from Dainty going forward?
I think in terms of market share, the data shared by retail study, which is PepperQ, we are at around 21%. So this is in the sugar confectionery space. And this is in terms of value. Mainly because our competitor, the number 1 player, Perfectly, operates in a very high value segment, whereas ours is a more mass market product. In terms of growing that business, it has been a challenge because of the current consumer disposable income issue. We have also launched new products in the chocolate category. So the sugar confectionery space broadly breaks down into sugar confectionery, chocolates, and then biscuits, right? When we acquired Dainty, they were only in the sugar confection space. So now we are slowly moving into the chocolate space. So we have launched a new brand called Dainty Hearts, and that is slowly picking up traction. And hopefully in the near term, we will grow that business to get some market share of the dominant players in incumbent. Also, pricing has been a challenge for confectionery. It goes in cycles, right? Like you have fixed price points like 2 rupee, 5 rupee, 10 rupee, 15 rupee. So soon as the VAT gets increased, you can't increase your price from 5 rupees to 5 rupees and 35 cents. That's not possible. So till you adjust pricing to the next bracket, there will be a hit in terms of margin for the brand owner and the company, which is us. So I think last quarter, we've been in that position. We've been hit by the increase in VAT and also the sugar tax. So that all we have digested in terms of our margins. But going forward, near term, we will look at like correcting the pricing structure slowly, given the challenging situation on consumer spending also. So it's a tricky situation, but in the near term, we expect to solve it.
All right, thank you for that update on the confectionery business. So we covered two main segments of Sunshine Holdings, and now we are reaching the most awaited segment to talk about, that is the agribusiness under Watawala Plantations. So I think the audience will be very much curious to hear about this segment since there are concerns related to the palm oil cultivation. So Vish, all these questions under this segment would go for you. So first thing first, would you like to explain about the palm oil cultivation in terms of the lifespan of the crop and technologies being used, the labor requirement, so on and so forth? Because I think the listeners would be likely to hear about it when compared with other conventional crops.
Yeah, thank you, Radhashik. So the palm oil, basically the lifespan is about from the time you plant a maximum of 30 years. From the 25th year on, they become uneconomical. So you need to replant between the 25th and the 30th year. So that's the usual lifespan of a palm oil tree. In terms of number of trees per hectare, we usually plant between 130 to 145 trees per hectare. In comparison to say rubber, which is about 550 trees per hectare, just to give you a comparison, and tea would be about 14,000 tea bushes per hectare. So that would just give you an explanation as to the number of plants per hectare. And you asked about the labor. The labor use per hectare, maybe when the palm is immature, we would have close to say 4 to 5 labor per hectare. And when the palm is mature and during harvesting, we can have anywhere between 2 to 3 labor per hectare. So that's the labor utilization in terms of palm. In terms of technology, there's lots of technology that is available, especially in countries like Malaysia and Indonesia, but it all requires scale. And Sri Lanka, because we don't have the large scale, some of those technologies, will be very expensive for us to institute. But having said that, we use, some equipment for easier harvesting. We use telescopic poles. We use very ergonomic knives. And even for collecting of the fruit and transporting it to the processing center, we have different type of vehicles that can transport this fruit very fast. But in the processing center, which we call a palm oil mill, we have adopted the most newest technology in the mill so that we get the highest output or extraction from the fruit to oil. So all that is the newest technology that's available anywhere. The biggest challenge is the treatment of effluent that comes from the processing of the fruit, which also, because of our license, we have used very good technology. I'm happy to say we are the only company in Sri Lanka that is RSPO certified. RSPO is a regulatory method which is called Roundtable on Sustainable Palm Oil. So we are certified RSPO plantation company, which follows all the sustainability aspects of palm planting and processing.
All right. So since you were mentioning about all these aspects, I would like to ask about the cost of production as well when compared with other crops.
Yeah, it's not comparable, say, for a kilo of tea to kilo of rubber to a kilo of palm oil. It's not really comparable because they are completely different three commodities. So you cannot just give a comparison and say, this is lower or higher. But in comparison to international standards, we are a little bit on the high side, again, because of scale. We are talking about a 3,300 hectare property that we are managing right now. Normal scales are around 20,000 to 25,000 or 30,000. So, when you have that kind of scale, your cost of production comes down, your ability to purchase palm oil, your ability to purchase fertilizer, etc., is that much better.
All right, that explanation was very insightful. Thank you. So, would you like to talk on how the demand and supply dynamics for palm oil in the local arena have changed over the last couple of years? And do fluctuations in coconut oil prices affect the local demand?
Yeah, it's a tricky question. Basically, palm oil is something. First of all, let me back up. We produce what is called crude palm oil. Okay, that is the first processing of the palm fruit in the mill is what is considered crude palm oil, or in short form, it's known as CPO, and that's what Watawala Plantation sells. Now, a CPO would go into a refinery, and at the refinery, it's made into so many different products. And probably the most common thing that you would know is the RBD palm oil, which is refined, bleached, and deodorized. That's what we would use for cooking, etc. But there are so many components that come, something called stearing, gum, butter, so many things that come that is used across just about every product that you can think of. From toothpaste to soap to lipstick to powder to shaving foam, your spreads, all the items that needed for confectionery, cakes, for the all the breads. Every bakery needs palm base of products. Your Maggi noodles is full of palm oil. So it cuts across so many different products. But unfortunately, based on the government's policy, there's been lack of demand for this because there is a ban on import of crude palm oil. The people can only bring, RBD palm oil in. Therefore, instead the government brings more expensive oil, which is coconut oil. So there's been a reasonable amount of switch to coconut oil. So there's been some amount of lack of demand, but because of all the products that I told you, you can't do without palm oil. You need palm oil to, in most of those products, because you can't overnight substitute another oil for those products, because those products will taste completely differently. For example, there is 70,000 bakeries in Sri Lanka. Your day-to-day curry pan requires palm oil. Otherwise, the curry pan doesn't taste like curry pan. It will taste like something else. But I'm told there is about 20,000 bakeries because of this economic debacle have shut down, right? So those things create abnormal thing in the demand. So that's the demand issue. But I think with the economy getting better and hopefully better government policy, these things will change.
All right. Thank you, Vish. And I think it would be interesting to know the main factors that impact global palm oil prices. For instance, if we look into global palm oil and crude oil prices, there is sort of a correlation. Likewise, anything that directly affects.
Yeah, so again, like anything else, commodity prices, I mean, this is a commodity and it is about demand and supply, right? Whenever there is higher supply, then the prices come down. And also people's ability to stock. I mean, the larger consumers like India and China, their ability to stock during cheaper pricing and the dollar depreciation, appreciation in those markets. So those things matters. Yes, to petroleum crude oil, because of the ability to substitute palm oil as a biofuel. So whenever the petroleum price goes up, X amount of palm oil is used as biofuel, especially if you take Indonesia, 30% of diesel consists of palm oil. So all those factors changes the pricing in comparison with the crude oil.
Thank you for that information. And I would like to know, since you were mentioning about the lifespan of the palm trees, what percentage of your palm oil cultivation is nearing its maturity? And what sort of an impact will it have on WATA's profitability in the coming quarters?
So we are generally a very young palm oil plantation because we have been continuously planting. I would say less than 10% of our total hectarage is, that needs immediate replanting. So we are okay, and I don't think there will be a major issue in our profitability if we can replant that 10% in the next 3 years or so.
All right. And considering the prevailing ban on palm oil cultivation, I know it's like a core commodity, palm oil is a core commodity, but are there any plans to diversify into other conventional crops as well to mitigate any sort of potential adversity on profits for WATA?
Yeah, so the company has been steadily looking at in the last 2 to 3 years on the other avenues. One thing that we have done is increase our cinnamon, and also we have established a state-of-the-art cinnamon peeling center, which we announced I think last quarter. So that and we have also gone into dairy. As you recall, we are reasonably big in dairy. And we also looked at the possibility of the coconut plantation. So we have invested in some small land banks of coconut as well.
All right, thank you. And in the event that if the ban on palm oil replanting is lifted in the coming months, what sort of a positive impact would it have on WATA's earnings in the near to medium term?
I think it's a very futuristic statement for me to make. Like I said, we have a very small amount that we need to make. Obviously, if the ban is lifted, we are allowed to replant and plant new. It will have a positive impact on our profitability going forward.
All right, so that was quite a comprehensive discussion on all the segments of Sunshine Holdings. And I'm sure that the audience got some good insights on all the aspects of the group. So now I would like to ask on a fact that the investors would be very curious to know, which is on dividends. So Vish, what sort of a dividend policy would Sun and WATA follow going forward? Because we know for a fact that WATA is a top dividend paying counter with a payout of around 122% as of financial year 23. Even Sun has recorded a dividend payout of around 25%. And can we expect any strategic investments from both the companies in the near term as well in terms of the dividends?
So Sunshine has a dividend policy, given taking into consideration our growth, right? Our inorganic growth, where we require cash for investments, etc. So barring all that, we look at 1/3 of our profits to be paid out as dividend. That's been the general policy. But having said that, it's all based on cash flow and the economic conditions. If we need cash perseverance for the immediate need, all that will be taken into account. In terms of Watawala, it's a high profitability company, and in the last few years, we haven't had any large investments, especially to do with replanting, etc. Therefore, we have been able to pay out higher dividends than what we would normally pay out. So we would like to continue to pay that out, but if there is investments, then we would reconsider those high payouts.
That's really interesting to get to know. And so the palm oil business is the major contributor to WATA's top line by around 80% of a proportion. But would you like to add any remarks on the dairy segment as well? Because in the latest interim results, we saw that the dairy business has performed quite well.
Yeah, so dairy, it's taken time to stabilize. It's a new business for us. So we are finally able to get to a level where, the company is profitable now and quite steady state. Also, we went through COVID and the economic issues where the main expense in that business is feed. And we struggle to make sure to get consistent feed at the right price. So we are much behind that now. We have put in place a very steady feed plan that we have. So therefore, we are able to control our costs. And I think the quality of our milk is probably the best in Sri Lanka right now. And therefore, it commands a very high premium. So therefore, the revenue growth has also been good. So I'm very bullish about the business going forward.
All right. I think now we are sorted with all the aspects of the group's performance. So that marks the end of questions from my end. And thank you so much, Vish and Hiran, for your cooperation. So now it's time to move to our chat box to review the questions from the audience. So I would like to invite Renal to take over that segment. Over to you, Renal.
Thanks, Natashi. And once again, thank you so much, Vish and Hiran, for that very detailed update. I think it was very insightful. Now, as we look at some of the questions, just looking at a couple of points that were mentioned, I might have to go a little deeper regarding the palm oil ban, if you don't mind. So first is, if you are potentially looking at replanting coming into the picture, would you be looking at replanting in existing plots only, or is the discussion about this ban being lifted, including, is that giving you all the opportunity to acquire new lands and plant in those lands as well? How is the discussion actually going forward?
So, it's all up to the government. What we have asked the government, because the new planting will take a lot of time and analysis, and for the government to come up with, based on the environmental rules, etc. We have suggested to the government, allow us to replant first. Then you can come up with a policy on new planting. That's what the industry, the Palm Oil Association, has made a request to the regulator.
Right. And just sticking to that, in the event that, let's say, this does come through, how long would it typically take for, let's say, new plants to contribute to the top line? And how long would it typically take for an investment to break even in terms of new planting or replanting?
So typically it takes 3 years from the time you put a plant on the ground to when we can harvest. But I think 5 years probably would be the time when the investment would break even.
Right, right. And just because we are usually seated on the other side of the table in this discussion, or rather sometimes maybe not even privy to this discussion, purely based on what the conversations have been between the industry and the government, Is there a reasonable chance that we might see this ban being lifted, or are we still far away in the negotiations with the state?
Let me put it this way. If it's left to me, we have made all the data available, all the scientific information available internationally and locally based on all the expert analysis, etc. So that's what the Palm Oil Association, which consists of all the palm oil planters, has done, and equip the authorities with enough amount of data, independent data, so they can analyze and come to a conclusion. So we are hoping that they will make an intelligent decision based on the data we have provided, and that they can freely get for the betterment of our economy. So that's the best answer I can give you.
Thank you. No, I think that's perfectly fair enough. It was a tough question going in.
Yeah.
So on the flip side of things, again, assuming that let's say you do have the opportunity to replant, would the company typically be looking at sourcing funding for this through debt, through rights, through some of the existing cash flows? Has there been any discussion from the company or any idea regarding this?
It's a very much a board decision, Renal. I don't want to comment on how the board decides on strategy for its cash flow management. So pretty much Watawala Plantation has been a cash-rich company with very little debt. So I mean, I'll leave it at that. So our ability to raise funding would not be a big issue. Especially in Watawala Plantation, I don't think that will be a big issue for us to raise funding to do replanting.
Sure. Thank you for that. So I think, yeah, moving out from questions regarding the ban, because I think that was quite extensively covered. If we go more in terms of labor costs, now at this point, we are potentially on the verge of election cycles happening within the next year or two. Are there any discussions with regard to significant changes in terms of the daily wages, in terms of laborers in plantations, anything like that we need to watch out for?
Yeah, so the labor unions have requested a wage increase, especially based on the government's giving 10,000 allowance to all the government servants. So they feel that they also should, and since the 1,000 rupee wage, it's been almost 3 years. We don't have a collective agreement like we used to do before. This 1,000 rupees was given by the wages board. Currently, there is no wages board, so I'm told that they are constituting a wages board, and they will come up with a new wage, which is, we are not privy to it, and the wages board will decide based on the inflation, etc., etc. But what I can tell you is, unlike tea, palm oil can afford the wage. That's not an issue, and it's only not because of the profitability there. It's the amount of labor that is used is significantly less. Therefore, absorbing a little bit more on the wage shouldn't be a problem. What we need to do is to continue to improve our productivity, which is something that we will continue to work, introducing new technology, etc.
Right. Thank you so much for that. And just also having a look in terms of potentially if the market right now rather is quite restricted with the bans and whatnot. But in the event that, let's say, things were to be removed completely, a hypothetical situation, would you foresee any other plantation companies being interested in coming into palm oil, or is it something that you need to have a bit of experience in the industry to tackle?
I think already there is close to 6 or 7 companies that either they are in the infant stage of planting, or they were not allowed to plant when they started to plant. So generally there is interest in planting palm oil.
Right. Thank you. Just another question from the audience in terms of what currently, when you're looking at the imported aspect of the RBD palm oil, which you mentioned, versus what Sunshine produces, is there a major pricing disparity? Is it priced at whatever the import price levels? How does that typically work?
No, so our crude palm oil here and crude palm oil in, say, Malaysia or Indonesia, it's all on international price, international commodity price. But the refined products are different price, and we are not in the refined products. So the crude palm oil, I can't sell it any more, any less than the international market. It's like crude petroleum.
Understood. So thank you so much for that as well. There are a couple of other questions as well. I can see, I think there are a couple of questions with regard to the dairy business. I think this is something that has piqued people's interest since of late. Is there a projection as to what component of revenue this would be? This would take over the next couple of years?
Difficult to give a projection now, because like as you said, the bigger component is the palm oil, right? If the palm oil prices go up, then it will have a proportionate impact on the dairy business contribution. So what will happen is we will strive to increase the yield and the number of milking cows. So there will be natural growth in the dairy business in terms of pricing and in terms of number of liters, right? So that will grow, but again, when you compare with the bigger palm oil business, it's still small. So I would say like it will not go to 50-50 suddenly, right? It will be always that 80, 85 range.
Right. There's also another question that we have here, which is, I think this is with regard to yours mention of also looking into potentially coconut and cinnamon as well. Are these verticals purely going as a backup plan in the event that the palm oil ban takes time to be released? Or would these be verticals which you would anyway continue to expand on and improve and focus on?
Cinnamon is something that we will continue to improve. Cinnamon is a very valuable, and Ceylon cinnamon now is very well known in the market and fetches a decent price. And the location where our lands are located, cinnamon is suitable for growing. So wherever there is land that is not suitable for palm oil, we will continue to grow cinnamon and grow that.
Right. Thank you. There's a different question with regard to the medical device side of things. It states, can we have an insight as to how your medical device volume growth would be? I think the question is, one is over the years, as well, how it has been and what typically drives a volume growth in that segment.
When our volume growth is really difficult to capture for that entire segment, because it could be one SKU could be a suture, right?
Right.
Suture, and another SKU could be a big machine. So like, how do you compute the weighted average volume is a question mark. So we usually measure the revenue of that. But in terms of, I'll break it down in terms of diagnostic and devices. So in diagnostic space, we have seen after the COVID, when the labs get more business, that has steadily been growing in terms of volumes of reagents, right? Like what we do is we sell the reagents to the hospitals. So that has steadily increased, and also we have seen this trend of smaller labs, satellite labs or collection centers. So that we won't be able to. So we have different brands for those. The Siemens and the big names are like big equipment which takes on like big volumes, right? You can't run a Siemens in a small lab. So we have different brands like Randox that we represent, so that we are placing those machines in those mini labs. In terms of surgical, also I think see our data that we publish in our IR, it has gone back up to OT utilization has gone back up to 85% levels, right? There is still a small reduction compared to pre-COVID because of the economic situation. Some people are deferring their non-essential surgeries, so that gap is there, but still it is on the upward trend. So although I can't give you a percentage, I would say it's on the upward trend based on those two factors.
Yeah. I'll give you a quick anecdote, Renal. Compared with other markets, our neighboring markets and the Western markets, Sri Lanka is still low in terms of treatment based on diagnosis. I mean, tests and various things. So, a lot of it is, so there is still scope comparing to the other countries, increased amount of testing so that you could reduce the time of diagnosis. So that allows you a lot of growth forward.
Thank you. Thank you. I think that was a very, very detailed answer for that question as well. So I think we have another slightly similar question coming in with regard to palm oil. And I think we can see how we want to address this as well. And that is, depending on the origin for where palm oil is produced, is there typically a difference in the price that you might receive as well? I think especially with comparison to some of the Southeast Asian countries, or is it just the flat rate across the board?
So it's like this, the palm oil price itself in terms of commodity is the same. But for example, Indonesia has an export tax. When you export crude palm oil, they charge an export tax. So if you buy crude palm oil from Indonesia, you will pay a higher price as opposed to Malaysia. And they sometimes take off the export tax, or they, keep based on supply and demand. So those are the differences that you will face in terms of pricing.
Right. And I think Indonesia too has been going back and forth, if I'm not mistaken, with regard to that tax as well.
Yeah. Because they have a large domestic demand, so they have to make sure that the domestic demand is met before whatever the oil is exported. So they play around with the export tax just to make sure the domestic demand is met without inflation taking in that commodity.
Right. So I think there are a couple of other questions as well which are a little similar to what has already been answered. But we have come, I think the session has gone on for an hour as well. So I think we can bring it towards a close. Thank you so much, Vish and Hiran, for joining in. We also must comment that Sunshine is one of the companies that makes it very easy for us as investment advisors for the sheer amount of investor relations work that you all do. And we thank you for all that you do on a very regular basis. And we thank you as well for joining us in this session today and for answering all the questions from the audience and questions that we had as well. So thank you so much for joining us.
Thank you, Ronald, and thank you, Natashi, and the entire team at Softlogic for hosting us and letting us engage with your customers. Thank you.
Thank you. Have a good evening.
Thank you. And with that, we bring this webinar to a close. Thank you, everyone, for joining in. Good evening.